Everyone, my name is Rebecca Plua, and I'm the Client Services Trainer here at Home Point Financial. This presentation is for our Home Point TPO clients to go over what Home Point Renovation is and what changes you'll be seeing in the Point portal. I'm also joined by Brad Smith, our Managing Director of Renovation Sales, a great asset to everyone who will be working with our renovation teams. From here, I'll pass it to Brad so he can get started on what renovation lending actually is.
Hey, thanks, Rebecca. I appreciate it, and thanks for joining us today. Today, we're going to go through kind of the what you need to know and why regarding renovation lending, and give you some good details on product overviews and on how to focus on selling renovation products. So there's three products that we'll talk about today: the 203K Limited, the 203K Standard, and the Fannie Mae Homestyle Loan. All three of these loans are available for both purchase and refinance. They're conforming and high balance eligible. They're really designed by both FHA and Fannie Mae to provide borrowers with solutions to existing deferred maintenance items and problems that may be uncovered through home inspections, and finance both required repairs and desired repairs into one simple first mortgage. These programs have been around for quite a while. The FHA programs date back into the late 70s, and Fannie Mae into third quarter of the 2007. But there's really a hugely increased interest in these renovation programs, and this is one of the reasons. The consumer awareness throughout the country today is at the highest levels it's ever been regarding the ability to renovate a residential property. One of the things that the millennial first-time homebuyer market has discovered is that using renovation lending products with the same LTVs, the same down payments and credit guidelines, they can build all of the cost and customize and personalize their dream home. A couple of the myths regarding renovation lending is that it's only for truly dilapidated properties or condemned properties, and that really couldn't be further from the truth. Although those properties can be remedied using these products. Also, just simple cosmetic upgrades or a home that may have been renovated at a prior time that doesn't meet the borrower's current standards or desires. And these are just a couple of before and after pictures and examples of that. The project on the left side of the screen was a large-scale Fannie Mae Homestyle renovation, both interior and exterior. You can see here that load-bearing walls were removed and replaced. The ceiling was raised almost 3 feet. There was a second story added to this. This was almost a $265,000 renovation project, massive and structural and complicated. And then the renovation project on the right side of the screen, this was just simply the one remaining bathroom that had not been renovated in a home that was owned by a private investor. Our borrowers came in and just simply built $8,500 into the purchase price of the loan and renovated the bathroom into what you see in the after picture. In the purchase segment, there's so many opportunities to allow your borrowers to focus on what's really the most important piece of buying a home, certainly for millennials, and that's all about location. So this is an example of a loan that we closed in July of last year. It was purchased by a first-time home buyer. This young lady had identified the neighborhood she wanted to live in. She told the loan officer that she had driven by this particular home probably a dozen times, circling the neighborhood looking for a property. Didn't imagine that she could buy this one. We trained the loan officer on the same renovation training program. He then turned in to the borrower and explained the prospects and the possibilities, and she went in and put a contract on this home. She bought it for $47,000 in January of last year. She included a $108,000 renovation escrow account for all the repairs and upgrades, and a $15,000 contingency reserve fund that was also financed into the loan. So her total loan amount was $172,000, and after completed, the subject to completion value came in at $199,000. And this is typical. This happens quite often on these loans. Purchasing a home that would be considered the ugly duckling and turning it into the swan gives home buyers the ability to have instant equity at the time that they move into the home. So this was a tremendous opportunity This particular home using upgraded energy efficient items, windows and doors, insulation, new central heating and air, new insulation and ductwork, her utility bills will be a fraction of the neighbors for years to come. And that's really one of the biggest values for first-time home buyers, allowing them to build these deferred maintenance and repairs and upgrade to have a home that they recognize financial gains forever. For a loan officer new to renovation lending, this is an incredible way to expand your potential referral base. The bullet points on the right side of this screen, specialty vendors, this is a partial list. Anything that you can imagine that could be performed as part of a home improvement project or residential property, those companies, those suppliers should know that you have access to these renovation lending products. Some of the examples, solar panels, this was a marketing campaign by a loan officer that did a direct mail drop to financial planners, tax advisors, and CPAs this time of the year, just prior to tax season last year. And the marketing piece listed home improvement projects that the IRS recognized at the time as being eligible for tax deductions, either labor, material, or both. And storm shutters is certainly the number one item there. It gives the purchaser of the solar panels up to 30% of the acquisition price in the form of a federal tax credit. Storm shutters, that goes with the bottom bullet point, insurance agents. This was another direct mail marketing campaign where a loan officer partnered with a brand new insurance agent. They did a large direct mail marketing campaign. One of the homeowners picked up the marketing piece, and on the marketing piece, it asked, have you done a homeowner's insurance update? Have you repriced your insurance lately? And here are items that you could perform as part of a home improvement renovation loan that could equate to a reduction in your homeowner's insurance premium. This borrower, after installing a custom storm shutter package, changing all the windows and doors out in the home, and installing a custom security system using Fannie Mae Homestyle Renovation Lending, reduced their homeowner's insurance premium from $9,700 a year down to $2,700 a year, saving them just at $677 a month. So an amazing savings. Anything that you see, heating and air conditioning companies, if you see advertising on TVs in your local markets, they should know that you have access to these products. If you think about the insurance agent direct mail marketing campaign, this is a great example of what I call the multiplier effect. And the multiplier effect allows you, the originator, to direct mail market or drip email campaign or direct email campaign, and it triggers a desire for one particular item. And then the conversation leads to, did you know you could include multiple renovation projects into the same renovation loan? So by having access and knowledge of the multiple contractors and subcontractors, that particular loan officer is able to add $75,000 or $85,000 into this loan amount. The cool thing there is, as an originator of these products, you're paid on the total loan amount, and creating a much better situation for that homeowner. And then in addition to that, the multiplier effect really leads into what I call creating a dream team. Loan officers around the country that focus on these and originate multiple renovation loans monthly have all taken the time to create and establish a dream team. And the dream team, really, for me, it begins and ends with the HUD consultant. They're a wealth of knowledge, including in the presentation. I'll give you a link where you can locate consultants in your market. That's a great place to start for a new originator. Introduce yourself, have lunch or coffee. Let them know that you have access to all of these renovation products. They'll know real estate agents that understand and are looking for subject matter expert loan originators with these products. And then adding to that would be a specific general contractor or multiple general contractors. Underneath them, they can have all the subcontractors necessary to complete a full renovation project. Focusing really on the purchase attributes of these renovation products, the millennials certainly top the list as far as targeting our marketing efforts. They've emerged into the first-time homebuyer market. The average age of the first-time homebuyer is now 32 years of age within this demographic. They're certainly the largest demographic in the country. one of the downsides to the popularity of the renovation shows we saw on an earlier slide was it has created almost a monster with millennial buyers, because their wish list of items that they want in a home, they want their buyer's agent to locate for them, has gone up to as many as 60 items. That property doesn't exist in the market. They'll never find a property that has all of their 60 specific items. But what it's created, especially in a limited inventory market, is an investment of time by our buyer's agents that add up to, in some cases, 40 hours to obtain a sales contract, to locate a home that their buyers are comfortable in purchasing. On average, these millennial buyers will view 30 properties online that the buyer's agent pulls from the multiple listing service, and they visit 10. The solution with renovation financing, literally, just like the first-time home buyer in the before and after pictures earlier, she knew where she wanted to live. Had she known about these products up front, it would have saved her agent hours and hours of hunting. You could point to the street you want to live on, in this school district, close to business, close to work, whatever the trigger points are. And going back for millennials, it is all about location. They know where they want to live. They don't think they can afford to buy the home that they want. And that's not true with renovation financing. And then targeting listing agents, another great attribute of renovation financing. Historically, using the traditional mortgage financing mentality, if an agent takes on a new listing and they realize that the roof won't pass inspection, or the heating and air conditioning doesn't work, or there's other deferred maintenance or even functional obsolescence within a home that would prevent it from qualifying for traditional financing, they default to one of the three terms at the top of the page: as is, handyman special, cash only. Those terms, if a buyer's agent is searching for a property online and they see these terms and they know that their buyers need mortgage financing to procure the home, they're not even going to add it to the list of properties for the borrower to look at online. So helping them stage these homes and change the content in the special comments section in MLS, it's renovation financing available, renovation eligible property. Some loan officers go to the extent of helping them stage the home with before and after pictures, either specific to the property or generic. Any of those things give a loan officer the opportunity to brand themselves for anyone that walks into the home as being someone who provides renovation lending products. One of the most compelling items for broker owners of real estate offices is adding additional inventory to their current listings within the company. And in every city across the country, there are homeowners that have certainly in their minds, they've made their mind up, they want to sell. They're following the traditional kind of mortgage financing or real estate advice given to them by their buyers or by their listing agents, that they need to get the home list ready. They need to paint it. They need to change the flooring or change the countertops or upgrade the kitchens, the bath. None of those things are necessary when you walk in the door or your buyer's agent with your borrowers that you've educated on renovation financing. So there's marketing campaigns that have increased listings by dozens of listings in just a couple of months in deploying a new marketing campaign in targeting new listings. One of the things specific to the millennials that I find the most compelling, and certainly when you think about these numbers, you'll understand why it's important to add social media marketing and website marketing describing these products at normal LTVs so that millennial buyers realize they have access to products where they don't have to put 20% down or more. This was a survey conducted by Realtor.com, the chief economist listing the top 5 impediments preventing the millennial housing boom, the perceived problem number 4, and all of the other 4 impediments we provide a solution for. Now you can provide a solution for with renovation financing. And if you look at the numbers at the bottom of the page, this survey indicates over the next 5 years, 8.3 million new millennial households will form. If you compare that number to the Home Affordable Refinance, or HARP, it's been extended now 5 times, I believe. It's in its 6th year. There were a total of 3.8 million homes owned by Fannie and Freddie at the onset. We're 6 years down the road, and there's still major lenders advertising on TV trying to attract the unrefinanced borrowers still eligible for this product. So this is truly a housing boom once it begins to gain momentum. And the limited inventory certainly poses a problem in most markets for the purchase side. Baby boomers are one of the contributing factors to why we have limited inventory. For whatever reason, they've decided not to move to upsize, move into a lakefront property, or downsize in preparation for retirement. Problematic for the purchase market, but definitely creates an opportunity for originators using these renovation products as a cash out alternative. Up to 80% of all the refinance borrowers that are pulling cash out use the proceeds for home improvement projects. They're using the current value of the property, and they're using limited access to resources with lower LTVs. These refinance programs go up to 95% on the Fannie Mae Homestyle for owner-occupied, to 97.75 on the FHA. They're not cash-out refinances, and when you compare pricing, LLPAs, they price very well versus a cash-out. This is an example of a marketing piece that was wildly successful in different markets all over the country. Don't move, improve. If you've decided you're going to stay where you're at, why not take advantage of a renovation product that would let you add square footage to increase the value? Or better yet, why not take the opportunity to improve your existing home and possibly add equity or add value to the home with that? This was a release from Zillow that talks about a mid-level bathroom remodeling that could return as much as $1.71 per dollar invested. The National Association of Builders also just released an article that listed 15 home improvement projects, not one of which returned less than 90 cents on the dollar. So it is a great time with limited inventory to renovate your existing home. So moving on to the kind of the what you need to know, that was why you needed to know why these renovation loans are so prevalent. The three products that we'll talk about today, the FHA 203K Standard, the 203K Limited, and the Fannie Homestyle are the three renovation products that we will focus on. On all three of these renovation loans, there is a contingency reserve fund that is financed into the loan. As a general rule, it's either 10% if the utilities are on and in good working order, or 15% if one or all are not at the time that the appraisal is completed. This is a great safety net for borrowers. This will address any unforeseen health and safety issues that occur during the renovation or the construction phase. Hopefully you're using upfront a home inspector or HUD consultant to perform home inspections, and there aren't any unforeseen health and safety issues. And that's a critical part to successful originations, is doing a deep dive up front and allowing the borrowers to include not only their desired repairs, but also the required repairs, so that all of these homes will meet minimum property standards once we complete the construction. On the FHA, that will be the first product we'll talk about today. All of the unused or remaining funds, once we complete the renovation, must be applied as the principal reduction. On both the 203K Standard and the Fannie Homestyle, any unused funds may be applied as a principal reduction, or the borrowers, in conjunction with the contractor, can submit a change order requesting additional work. The disbursement process on these loans, this is moving from the operations team, our fully dedicated renovation team of setup staff and underwriters and renovation loan coordinators that focus all their efforts on nothing but renovation loans, to move them to clear to close as quickly as possible. The same thing with the escrow administration team or the draw administration team. It's housed internally. We manage it inside. The process is once a file, if it's a broker file or a non-delegated correspondent file, as soon as the file gets to clear to close, the borrowers will be notified by email that a specific escrow administrator has been assigned to that file. Within 2 business days or 48 hours of funding and purchasing the loan, once we legally own the loan, that same escrow administrator will then reach out and make phone contact with the borrowers, the contractors, the HUD consultants, or the project manager, if applicable, and establish a direct line of communication. And the reason we go to these extremes is we want to make sure that our third-party originator partners have the ability to originate multiple renovation loans without any post-closing responsibilities, either from the operational staff or from the origination or sales side. Once we disperse funds out of our escrow or draw administration team, we send checks that are dual party checks in both the contractor's name and the homeowner's name. They're sent certified mail. So the 203K products applies to both the 203K standard and the 203K limited. Credit score requirements is 640 on the standard, 620 on the limited. Max DTI is 50. You must have AUS approved eligible findings. The 30 and 15-year fixed products are available. On the FHA loans, they're only for owner-occupied borrowers. And then outside of that, you're just going to follow our normal Fannie or FHA guidelines. And of course, on each one of these three, you must have AUS approved eligible findings. There are no manual underwrites allowed. Ineligible properties, no condotels, co-ops, manufactured housing, multiple dwellings on a single lot, or mixed use. FHA is pretty specific on the ineligibility of luxury items. This is just a snapshot from FHA's website of what's not allowed. We could take this same slide and slide it over to the Fannie Mae Homestyle product, and they're allowed. A couple of footnotes on this slide. Of course, these are renovation loans. It needs to make sure we're not doing new construction. An FHA requirement is that a property in its current location must have a certificate of occupancy for at least 1 year prior to the assignment of a new FHA case number. You have to pay attention to boarded up properties and condemned properties. There's additional issues and problems that come with those. FHA allows for a full tear down and rebuild, but pay close attention to these loans. They're problematic post-close in a lot of cases. And then all of the health and safety issues must be addressed so that the home meets HUD minimum property standards after the renovation has been completed. These properties aren't specific to any type of property. So it could be privately owned, it could be a bank-owned REO or HUD REO, Fannie or Freddie REOs as well. So the first product we'll talk about today is the FHA 203K Limited. The 203K Limited is non-structural. HUD calls it uncomplicated. I don't think that does justice to what can be done with the limited, but there's no minimum dollar amount. The max is $35,000 for total rehabilitation costs. It does not require the use of a HUD consultant or a general contractor, but we limit the number of contractors to 3. Work must begin within 30 days. You have 90 days to complete the project, and this is the only one of the renovation projects that has an automatic draw disbursement up to 50% of the contractor's bid at the initial closing, and there's a total of 2 draws permitted on the limited. Here's an example when I say it doesn't really do justice. There's a lot of work that can be completed with the 203K Limited. Roof, gutters, downspouts, plumbing, electrical, flooring, heating and air conditioning systems, remodeling of kitchen and bathrooms, anything that's really not structural can be a part of the 203K Limited, provided that you keep the full balance under $35,000. So no relocation of load-bearing walls or structural repairs. If those were to occur, or even if the appraisal notated foundational or structural issues, doesn't mean we can't move forward. We would just switch this from a 203K Limited to a 203K Standard. So when we talk about the $35,000 ceiling on the 203K Limited, that's to include all of the renovation-related fees. So what that really means for your contractor or contractor bid totals, they're going to be capped out at somewhere between $30,000 to $31,000, depending upon the percentage of your finance contingency reserve. And then the second FHA product is the 203K Standard. This is for full structural upgrades to construct, replace, or for additions, second stories, room additions, detached garages. Outside of luxury items, there's not a lot of limitations and things you can't do to a single family home with this product. It does require the use of a HUD consultant, which is a good thing on these loans. Minimum cost of repairs is $5,000. There's no max up to conforming or high balance county eligible properties, loan limits rather. The contingency reserve will be recommended or determined by the HUD consultant, but again, typically 10 to 15%, depending upon the utilities. Work must begin within 30 days. They have 6 months to complete a standard. The consultant can design the project to be divided up into as many as 5 draws. You are going to use a general contractor. You could add a specialty contractor for technical items, mold abatement, for example. Because this project or product allows for structural improvements, if the HUD consultant and the borrowers deem that the property is uninhabitable during any portion or the entire portion of the renovation, the borrowers are able to finance up to 6 months PITI payments into the loan amount, so they don't incur double payments, giving them the ability to just move into a finished home. Unlike the 203K Limited, this program and the next program, the Home Style, there are no automatic disbursements to contractors. You're using general contractors. They're used to having to front monies to get projects started or using credit lines. The fact that you're partnering with a construction loan management company that has their entire project held in a federally insured depository account in the borrower's name that we manage gives them a great deal of comfort. All repairs on both the standard and the next product, the Home Style, must be completed in each phase, inspected and improved, and a draw request. So an interim draw will have a 10% holdback withheld from the contractor. That holdback funds, the total of the held back funds will be released to the contractor on the final disbursement. Eligible repairs with the 203K standard, again, major structural alterations or additions, added bathrooms, bedrooms, second stories, master suites for moving parents or children moving in with parents to care for aging needs, the repair or removal of an existing swimming pool without dollar limitation. Another interesting feature here is the conversion of a multifamily to single family or single family to multifamily. And we certainly see a lot of first-time home buyers using that option, converting single to multi and vice versa. So the role of the HUD consultant on these loans, an invaluable tool. Their fiduciary obligation is to protect the borrower, but in doing that, they add a layer of protection for you, the originator, us as the construction loan management or the servicing lender, both pre and post-close. Pre-close, they'll meet the borrowers and the contractors at the property. Hopefully, they're the ones doing the home inspection to identify all of the required repairs. They'll combine the required repairs with the borrower's desired repairs and create what's called a work write-up or a specification of repairs, an SOR report. In that SOR report, it gives us the draw schedule from 1 to 5. And best of all, they perform the draw inspections so they know what to expect and what timeline. They'll make the recommendation for the contingency reserve. The link at the bottom of this page gives you the ability to locate HUD consultants in your market. When you click on that link, it will take you to this landing page and just simply input the city and state where the property is located, and it will identify consultants in that market. The work write-up that the consultants provide is very detailed, containing all of the information you see on this page, breaking out labor and material and total costs for each item on the project. This is a sample. This is available, as Becca will talk about a little later, in the Point online that gives you the ability to pull this up as a job aid, as a reference tool. This is the sample document, the final page. This is a great reference tool for loan originators or processors. All of the detailed numbers that you need to complete the Max Mortgage worksheet are included on this page, a great reference tool. HUD consultant fee schedule, their fees range from $400 to $1,000, depending upon the dollar amount of the escrow, the renovation repair amount. And then our Fannie Mae Home Style, the final product we'll talk about today, is, I call this the lifestyle improvement loan. Again, it's offered for both purchase and refinance. It's for owner-occupied properties, just like the FHA, but it also gives you the ability to originate these loans for second home and investment properties. There are no restrictions to the type of improvements, just permanently affixed to the property and add value. The one limitation that Fannie has is on the dollar amount of renovation financed into the loan amount. It's 50% of the subject to completion, or we call it the after improved value appraisal. So if your property appraises after repairs for $400,000, you could have up to $200,000 in financeable renovations in the loan amount. LTVs are the same, up to 95% for a primary 1 unit, 85 on a primary 2, 75 for 3 to 4 units. Second home and investment properties are limited to 1 unit. but 90% LTV on the second home, 85 on investment properties. Investment refis limited to 75%. Ineligible properties, no condotels, co-ops, no tear down rebuilds, manufactured mixed use or multiple dwellings on a single lot. It's kind of a combination between the 203K limited and the 203K standard. If a project exceeds 35,000 on a Fannie home style or is structural in nature, we want a project manager in place. Historically, we use HUD consultants because they understand the renovation products. We've partnered with a third-party vendor, Granite Risk Management, that can act as a project manager. So you've got two different lines you can choose from to put a project manager in place. In either case, they will do the exact same work that a HUD consultant would do on a 203K standard. Visit the property, inspect it, look at the contractor's bid, compile an SOR for the HUD consultant or an IPR, initial project review, for Granite. On each one of these loans submitted, there's contractor information that you will obtain as the originator on the file. In the Point online, you can access the required documentation, submission checklist, contractor acceptance packages. One of those, you need to have that completed. Gather the licenses and proof of insurance required by whoever the jurisdictional leader for your contractors are. They'll execute a W-9, a HOCA or homeowner contractor agreement, and then also sign the contractor acknowledgement. The contractor acknowledgement is an extremely important document. It tells the contractor at what point in the renovation process they will be paid. Eliminating miscommunications is really important for successful renovation originations. Contractor bids, in most cases, general contractors use certain software systems that are readily available throughout the industry. And this isn't an issue, but you just need to make sure that all of this data is captured by the contractor on their bid, including, we want to make sure that all labor and material costs for each item are broken out separately. Should have the contractor's letterhead or at least their contact information. And here's just a job aid available online in the Point for you to review and share with your contractors. One of the first questions you'll be asked is, where do I put the fees? Here's another job aid online available to you. LE and CD fee placement, and are the fees APR affecting? Calculating the max mortgage worksheet. This is a snapshot of the landing page for the online FHA 203K calculator available in HUD.gov. Very simply, just fill in the blanks: your property address, borrower's name. Is it a standard, a limited, a purchase, a refi, credit score? Once you complete that, internally it will direct you to the correct fillable PDF. This message will appear once you get to this stage. Either print or save this to your hard drive, as HUD's version does not save your information. This is a sample, another job aid on the Point that is our Fannie Mae home style max mortgage worksheet. Again, this one is an Excel document. It's just fill in the blank, and you can extract numbers from the IPR from Granite or from the SOR from the HUD consultant, telling this form what your desired LTV is, a place to start with a purchase. There's job aids that also walk you through this, available on the Point. Running AUS to obtain renovation eligible findings, very simple. Input the total renovation cost into section 7, letter B, alterations, improvements of details of transaction. When you do that, the findings will indicate you've been approved for a home style or FHA renovation loan. Ordering the appraisal is a little bit different on a renovation loan. You're ordering the appraisal as a subject to completion value, which means you're going to provide either multiple contractor bids or your general contractor's bid and the HUD consultant's SOR or Granite's IPR if you're using Granite. I would also recommend that you include a copy of the Max Mortgage Worksheet. It's a great roadmap for the field inspectors to see what you're trying to accomplish with the renovation loan. There's specific items that must be included in the appraisal. Most AMCs are familiar with this at this point. On each appraisal, it's called the subject to or as completed after completion value. We simply call it the after improved value, will always be included. On purchase transactions, the as is value can be the acquisition price or the contract purchase price. This is a snapshot of the reconciliation section on the appraisal where the subject to alterations or improvements is going to be located. And with that, I would like to turn this back over to you, Becca, and let you walk through the changes that we have in the point.
All right, perfect. So good news is that the loan submission process in the point really doesn't change too much if you want to submit a renovation loan. I'm going to go over the enhancements you'll see in the loan submission process and what you can do until that time comes. The first thing you'll notice in the point is the change to the resources section. There's a new tab under the resources section specifically for renovation lending. This area is broken down into forms, resources, and how-tos. Some items you'll see are a submission checklist, max mortgage calculation how-tos, and contractor acceptance packets. Brad also mentioned other items that will be available on the renovation lending materials under the resources section. Next, I want to show you what the loan program should be selected when you submit the loan. Once you submit the loan into the point and are reviewing your 1003 information, just make sure you have conventional selected for home style or FHA selected for FHA 203K standard or limited. Again, if it's going to be a home style loan, just make sure that conventional is selected. And if it's going to be an FHA 203K standard or limited, just make sure that you have FHA selected in that loan type. From here, we'll cover product and pricing. So nothing is changing from the screen that you see today, just pointing out that for home style pricing, you'll select conforming, and for FHA 203K standard or limited pricing, you'll select FHA 203K. Next, we have the LE request form. We do currently have the FHA 203K available for the appraisal type. The enhancement here will be having the checkbox available for home style. In the meantime, you can put home style appraisal product in the comment section at the bottom of the LE request form on the point portal to notify the loan opener of the correct appraisal type. Another enhancement coming to the point will be under the attached files area. There will be an extra comment stating that the max mortgage worksheet is required on all renovation loans in the blue box at the bottom of the screen. The last enhancement you'll see coming to the point for renovation lending will be on the initial submission form. Under the submission requirements for all loans, we'll be adding a reno-specific max mortgage worksheet checkbox. Until this enhancement is available, please just note in the comment section at the bottom of the screen for our loan openers that the MMW is included as this loan is a renovation loan. Should you have any questions on renovation lending, please feel free to reach out to Brad Smith at brad.smith@hpsc.com or our renovation lending teams, depending on the question. Thanks, everyone, and have a great day.